I want to give you a short tutorial on what a momentum stock looks like on a chart. This is a stock, Crocs, which did apparel and footwear. The stock was really started to move in late 2006, went up all the way through. It went up for over a year here from a low of about $15 here and all the way to a high of $75. That's about 5 times its money in a year, and Crocs was really strong. It was a fad, and we see this a lot in sectors like apparel or footwear or gaming stocks or restaurants, and it goes in cycles through the years, and you'll start to be able to see this when they're talking a lot about it in the news. It just keeps hitting highs, and these momentum runs can last for quite a while. So here's one that went up 5 times its original price, and it lasts for a year. Typically these momentum stocks will last for at least 6 months, 9 months, up to a year. Here's another one that was really popular. Split adjusted, this stock came over here. See the price over the far right, 34 cents, went all the way up to $90. And this is the one where Pokemon was a game for kids. It was really big on popular to cards, like baseball cards. And then they went out and did other electronic types of games, t-shirts, clothing. And so this stock went up to the mid-90s from 50 cents. And this momentum run lasted for 3 years. And then it went from $93 and came all the way back down to $8. So it lost 90% of its value, and that's very typical. We saw that with Amazon.com years ago. Here was the momentum run, and this is where I believe it was Henry Blodgett that talked about it. It was late 96. Amazon.com was $1.30, and he pretty much started the whole .com run, and the stock went from up to about $75 split adjusted from $1.33 to $75. So there's about 60 times your money in just 2 years. I'm trying to give you a little idea again about what these momentum runs can do. You want to try to get them on the very first run when people are starting to talk about it. They're kind of your grand slam home run types of stocks that Peter Lynch talks about, the life cycle of a stock and how long these can last for a year, 2 or 3 years, and have what he calls are 10 baggers or 7 baggers or 15, which is the multiplier of how much you make on your money. In this case, if it came from Amazon from $1.39 to a high of 88, that's a 63 bagger. That was one of the more notable runs. Again, going back to KIDE in the late 70s, 32 cents to 93 was almost 300 times your money, and it crashed and burned after that. Here's another one. This really wasn't a momentum stock as it was a real fad. I picked this one up and I studied it, what the company did. They make tennis shoes that had lights in them that flash and had little wheels. This was really popular with the young kids, and now it's not really too cool to have right now. It's kind of the out thing. And I try to look for these fads that are a fad in a restaurant or clothing or games that run up, and you just start using your technical and fundamental evaluation of what the stock's doing and do a very small amount and try to use these chartings for the long-term daily charts to hold, to tell you when to buy and sell. But usually they last for 6-9 months, and it's ideal to coincide it with the market being bullish in a generally good sentiment. You'll see less stocks starting to run and build up and turn into a momentum stock when there's a very negative market sentiment.